We're good to go, Eliana. Excellent. Welcome everyone to today's webinar discussion about cooperation and innovation through open banking, applying UK lessons to Invest Hong Kong. I am very pleased and very excited to have a truly fantastic panel with us today that has a wealth of experience when it comes to the wonderful world of open banking. I will introduce them very shortly, but first and foremost, a big thanks to the team at Invest Hong Kong and Innovate Finance for organizing today's discussion. In terms of some quick introductions, I'm Jeff Thijssen. I'm a partner at Bain, where I lead our fintech practice globally. And again, I am very, very pleased to be joined by some amazing speakers. We've got Dr. Bill Roberts, the head of open banking for the Competition and Markets Authority here in the UK. We've got Gary Lau, ED and head of digital services and open banking for Standard Chartered, based in Hong Kong. We've got Keith Groves, the head of UK at Plaid. Francesco Simonetti, CEO and co-founder of TrueLayer. We've got King Long, the head of Fintech at Invest Hong Kong, based in Hong Kong. We've got Dan Globison, the head of open banking for NatWest. And last, but certainly not least, we've got Lisa Gutu, director and head of UK at SaltEdge. What we will do today is I will ask Bill Roberts to initially share his perspectives on why the UK decided to roll out open banking to begin with. Where do we get to so far? And how have other jurisdictions now started to adopt open banking? We will then spend the remainder of today's discussion having a fun and interactive discussion with our great panelists about what they have done in the open banking space. Why are they so excited about open banking and its potential to really change the financial services industry? And we'll go into various use cases and what this means for companies and consumers in Hong Kong, and what are some of the key lessons learned. Please do submit your questions via the chat window. We'll try to address as many questions as possible throughout today's discussions. I'm sure there are many, so please do submit your questions through the chat function. I am going to hand it over now to Bill Roberts, who will spend a couple of minutes sharing his perspectives on open banking here in the UK. Bill, over to you.
Thank you, and thank you very much for inviting me, all of you. I'm just going to run through very briefly a few slides, which I hope you can put up, explaining why we adopted open banking in the UK and what the background was, and then just a brief update on where we've got to. So if you could just go to the first slide. Okay, so the first point to make is that, as we'll come to later on, open banking has been adopted in many jurisdictions now, but often for different reasons to the ones that led us to do so. In the UK, this was a competition issue, and it arose after a market investigation that we conducted into retail banking in the UK, where we found that 4 major banks had large and stable market shares, over 80%, around 80%. Current account switching rates were low. Overdraft charges were high, and small businesses rarely looked beyond their own bank for a loan, particularly an unsecured loan. And the conclusion was that banks didn't really have to work hard enough to keep their customers. So next slide, please. The solution we found, the package of remedies that we adopted included many items, but the centerpiece was what has now come to be called open banking, or customer-directed finance, as they call it in Canada. What we required was basically the largest banks in the UK to agree between themselves common standards for data formats, APIs, the mechanics, the plumbing, if you want, of open banking. And although the CMA has awesome legal powers, it's very hard to compel people to agree matters between themselves, because one party can always argue that they were up for an agreement, but the counterparty wasn't. So the second part of the package, the implementation package, was to appoint what we called an implementation trustee. This was someone who would chair discussions with stakeholders over standards, try and reach consensus amongst them. But if that was impossible, then that trustee would have the ability to make the decision for them, to require a consensus. We anticipated that there'd be quite a lot of discussion, disagreement over standards. In fact, there wasn't. We set a very challenging timetable, because we wished the introduction of open banking to coincide with another piece of legislation that was going through, which was the second European Payments Services Directive, or PSD2 as it's known, which had similar aims in terms of data sharing. The big difference between open banking in the UK and PSD2 was that PSD2, whilst it in effect required APIs, banks to adopt API technology, it didn't require them to adopt the same standards. So banks were free to adopt whatever standards they wished. So that was the big difference between what we did and what the Europeans were imposing at the same time. So just quickly on the next slide, where we've gotten to in terms of adoption. Well, of course, the 9 major banks who were required to adopt open banking did so, but so did many of the other banks as well, for fairly logical reasons, which was that they had to adopt APIs under PSD2. So why not adopt the common and open standards that the major banks were adopting? So we've achieved very good coverage in terms of consumer access to open banking. Probably around 99% of current account holders have access to open banking through their bank. Still 300 in the pipeline, but well over 100 TPPs, third-party providers in the market now. Initially, mainly aggregators using account information rather than payment initiation, but payment initiation is now beginning to catch up as the functionality has been improved over time. Consumer adoption, quite difficult to measure initially. And initially we were using the volume of calls going through the APIs, which we can monitor. And right at the start, there was something like 3 million calls a month going through the APIs. Last month, there were over 800 million calls a month going through the APIs, which equates, we think, to something like just over 3 million active consumers or end users using open banking at the moment. SME take-up was something of a surprise. Perhaps it shouldn't have been. I mean, small businesses were the first people to buy mobile phones, first people to buy PCs, fax machines. Yeah, they've taken to open banking like a duck to water, driven in many cases by the great way that the cloud-based accounting systems they're now using integrate with open banking. So if you're a small business now, you don't have to input your transaction data from your bank manually. You can do it automatically using open banking, and you can more easily, for example, reconcile your accounts payable ledger with the cash you got, the cash payments you had in your bank. So great take up by SMEs in the UK. And a bigger surprise still, certainly to me, was the take up by government of open banking. The UK's Internal Revenue Service, Her Majesty's Revenue and Customs, is now promoting the payment of tax through open banking payment methods, which makes a lot of sense. I mean, the HMRC, I think last year took about £11 billion worth of tax payments through cards. Adopting open banking will mean they get their money quicker, and they'll probably get it cheaper than they would through using cards. So an encouraging picture from in terms of adoption. Just say a couple of very quick remarks on take up in other jurisdictions. If we could just move on to the next slide. Probably need to, this is a moving picture. Initial take up was certainly the hotspot was Asia Pacific, certainly in Hong Kong, Singapore, and obviously Australia with their consumer data right legislation. But then the focus has moved across the world. I think next in line, we saw open banking being adopted in Kenya, Nigeria, Rwanda. And now the people are moving most quickly, astonishingly quickly, are in South America. Brazil launched in February and aims to complete a program that took us 2 years in 6 months. The US, slightly different approach, much more focus, unlike the UK, more focus on doing the thing on a voluntary basis rather than requiring it by legislation. And the Canadians still haven't quite made up their mind exactly what's going to happen. But this has now become a global phenomenon, though different jurisdictions, as I said at the outset, are doing it for different reasons. And in a lot of cases, this is to do with financial inclusion, for which you could possibly read bringing more people into the tax net. In other cases, one suspects that the motivation is really to give additional impetus to the fintech sector in their territory, so they don't fall behind other territories within their competing in the financial services world. I'll stop there. I've got one last slide, which we can probably come back to during the panel session, which is the learnings, but probably those are best exposed during the panel session. So I'll just stop there.
Fantastic. Thank you very much, Bill. I think I've said this many times before, but I think we're very fortunate here in the UK to have such a progressive set of regulators. And I think it's been absolutely vital to the success of the broader fintech sector here in the UK. And obviously it's great to see that that's now being rolled out in various other parts of the world. I want to switch gears a little bit. So Keith, I'm going to come to you first, my friend. Why do you think open banking is such a game changer for the financial services industry?
That's a great question. I think, honestly, open banking is the unsung foundation of the fintech ecosystem overall. Plaid is the world's largest open banking platform. We've seen that firsthand in the US, where the entire growth of the fintech ecosystem over the past decade after the 2008 financial crisis was built using open banking to onboard users, to build new use cases. And so now we power more than 80% of the world's largest fintechs. And I think you're seeing that wave now happen across the world. And so a lot of people don't understand how important open banking is to the growth of new financial services use cases overall. And that's why I'm really excited for this to become a global phenomenon and see where we head from here.
Thank you, Keith. Lisa, give me your perspectives.
Yeah, sure. I mean, I think that open banking is really changing how we are interacting with banks and also how we're interacting with our finance. And it brings an enormous opportunity for end users really first, because imagining how can you actually interact with the having all your apps, doesn't matter, from having, for example, a bank in the UK, one maybe somewhere in the US or somewhere else, you can still have all your finance in one place. That's the first thing. The second one being having an option, for example, especially, for example, I came as an expat to the UK, and it was nearly impossible for me a credit score just because I didn't have any history there. And now I actually can do it with some of the applications that are offering this in the market. And this is just some of the use cases that are being powered by the open banking. But I think the main challenge here is being around how it is being implemented. Because, for example, in the UK and Europe, it was done quite well in terms of having it regulated, having it under a single standard, and moving it forward for anyone that is licensed, that anyone is verified by the regulator to be able to get access to those APIs, which is critical, because in other parts where the bilateral agreements are being implemented, like, for example, as we've seen this in Asia, it makes it nearly impossible for fintechs to get access to those. The same goes for the US, where there's really no level playing field because of it. And this is something that I think is critical for the new markets that are being adopting the open banking regulation, to have this as under one standard with just one entity that will control the TPPs or the TSPs in the market, and will have it possible to open up this data to anyone willing to have access to those. So these are just, I think, some of the critical points I would think are quite useful for the Hong Kong and the implementation that they're having soon at the end of this year.
I think you're absolutely spot on, Lisa. I mean, Francisco, from your perspective, do you agree that open banking is the unsung hero of the fintech sector? I think, yeah, I'll definitely see a bunch of tweets after this, Keith, quoting that. Francisco, what are your thoughts?
Morning, Jeff. Yeah, I mean, I largely agree with what just Keith and Lisa they just said. So. If you take a step back, really, I think this is, we are talking about a bunch of different enablers that really allowed us to be in this point in time. Like it all started maybe back in the days in the 90s with internet and then mobile. And then quickly, I think like easier access into the financial infrastructure, it really created that sort of momentum that now is revolutionizing a bunch of different consumer behaviors. Like, for instance, I'm thinking about an equal starting line, a fair access to investment opportunities, that now it's becoming really, really important. So now where open banking sits in all of that, it is an enablement technology. It is the thing that enables you to very easily as a consumer to start accessing opportunities that weren't available before. And sometimes it's about boosting productivity, sometimes it's about making money more fungible and easier to move. Some other times it's just like improving frictionless flow for identifying yourself or port your data from one company to another. And it's probably all those things together. But I think the essence is open banking is an enablement into opening up finance, which is at the end of the day what as TrueLayer we stand for and what is our mission is all about. So we had really like a vantage point in the last few years as being the largest open banking platform in the UK. We are responsible for the vast majority of the API calls, volume of payments, connected users. And we have seen all those use cases really coming alive. And as Dr. Bill Roberts was saying before, like a pretty tremendous shift from an initial account aggregation sort of focus and now into payment initiation and account-to-account payments. And I believe this is going to be really important, really massive. It removes middlemen, it removes barriers, it kind of resets incentives across the board.
I think you're spot on. And it's obviously very exciting to see that this hasn't just led to the emergence of new business models, but we've seen whole new businesses effectively being spun up off the back of open banking that probably wouldn't exist if it wasn't for open banking. Dan, from your perspective, you and your team at NatWest have been part of the open banking journey since the very, very early days when we were just getting started. From a consumer perspective, what do you see as the main benefits to customers?
It's a great question. By the way, thanks for the invite. I really appreciate it. It's truly enjoyable. And although we're on the phone with competitors and partners and Bill, one of our regulators, it's we do collaborate, and it's been a joy over the last few years to grow something together into what looks like the world's leading ecosystem in fintech and open banking. Surely others will catch up and we'll be in catch-up mode after that. But it has been a pleasure. In terms of from a consumer point of view, I think it's worth just stepping back just a touch and thinking about what have we really done and what are we enabling. And so in no particular order, I would start with consumer data rights. I think that open banking has been the first step into the world of consumer data rights and letting the public, businesses and individuals like ourselves feel like they're in control of their data and they can securely share that data and consent to who's using their data and for what purpose. So that's just the tip of an iceberg if we think about it. That's a start of something much bigger that will impact not just financials, that'll impact big tech, fintech, and almost all digital players. So I think that's a really huge step forward in demonstrating that it can be done. I think that that although open banking itself provides new capabilities, it's not just those capabilities that are helping consumers. I think it's also the very promise of competition and a level playing field has meant that new participants, new fintechs have been attracted into the market, and venture capital has followed, or in some cases led, allowing those fintechs to flourish. So in the UK, before January 2018, and that was as you know, January 2018 went live, and early bumpy roads took a little bit of time to bed in. But in the years previous, the mere promise of this market attracted large digital banks, significant investments, payment players, and the rest just on the promise of it. And so I think that's a huge outcome that isn't recognized when we talk about solely how many people are using open banking at a given point in time. That's important, but I think the competition landscape is just as important, and looking at the capabilities that consumers have in their hands from a digital perspective has improved across the entire market. So the consumer wins regardless of whether they're using open banking that day or not to share data or initiate a payment. And lastly, I think that the bigger win again for consumers is going to be the emergence of digital economies in the UK and all around the world. Hundreds of digital economies will be driven through things like open banking. And we're just starting to see the use cases. I mean, personal financial management and new lending streams and international transfers and the rest. Some of the early use cases are genuinely valuable and creates innovation and competition. But I think we're looking much broader, because what we've built as a foundation will lead into a strong digital ID program, will lead into consumer data rights, stretching into places like comparing e-commerce shopping baskets and the like, and putting real control out there. So I think that the benefits to the consumer go well beyond the near-term use cases, Jeff.
I couldn't agree more, Dan. And obviously, we're only just getting started for us. I think we've, if you look at the potential for this to really benefit consumers across the globe, it's massive. Gary, from your perspective, when you look at the benefits to consumers and some of the exciting things that you and the team at Standard Chartered are working on, I'd love to get your thoughts on that as well.
Yeah, I think Daniel hit it spot on, right? So open banking, definitely the consumer wins for sure. No matter what kind of system or regulatory kind of policies are around, as long as there's open banking, I think ultimately it's all trying to achieve more innovative services, faster, better kind of access to finance, and just a more connected financial system, right? With everything that the consumer is doing. So, for Hong Kong, I guess what we're definitely looking at is how can we work with different industry partners to really lift up the digital kind of capabilities, not just in the banking area, but also different industries, and then helping different use cases or helping our consumers get the best out of both financial services and also other industries in Hong Kong, right? Such as telcos or travel industry or all sorts of across the lifestyle of our consumers. So I think definitely consumer wins is the key point.
Amen. King, I wanted to come to you for a second just to get an update on the latest and the greatest when it comes to open banking in Hong Kong. Now, I know there's a lot of exciting activity. I've been very fortunate to be involved in some of that, but it would be great if you could give everyone an update on the latest and the greatest when it comes to open banking in Hong Kong.
Yes, thank you, Jeff. Again, it's a great pleasure to share the stage with so many experts in this space. And in the interest of time, perhaps I can just quickly highlight three major perspectives in terms of the developments in different angles. Now, first of all, when we look at the work done by our local regulator, HMA, they've done a fabulous job to lay out the framework for different phases of opening up the APIs and promoting more data sharing over time. Now, when we look at, I guess, development over the past few years, I would say that those are mostly sort of behind the scene, the infrastructure level of developments. So that's why for a lot of folks who are not in the space, either working for the bank or on the regulator side, looking at the sandboxes and whatnot, in a way, it's kind of like transparent or invisible to the outside world. So that's why a lot of things have been happening, but not so much on a consumer understanding level that people saw the benefits. So this is the first thing I would say. Lots of ground have been done, but it's not as visible. Now, the second point I want to make is that there have been numerous attempts to try to define some sort of standards. And again, HMA has done a fabulous job. In fact, the CEO of HMA, Mr. Eddie Yu, came out at the FinTech Week in November last year to announce this project called CDI, Commercial Data Interchange. And this is basically an infrastructure championed by HMA that's intended to define the standard as well as that infrastructure to, in a way, motivate the more participants to use that as the conduit to do more sort of sharing of data. Now, at the same time, it was just 2 days ago, on the 8th of June, actually, Eddie came out again to lay out the 2025 FinTech strategy for Hong Kong. So of the 5 major areas that he has singled out as the major focuses for HMA, one of them is also the data infrastructure. And he even specifically mentioned, federated learning, as the technology that HMA would like to, encourage different participants to look at as a way to give them the sense of comfort to so-called share data. Because again, this is always, this kind of an inertia in which you have to get over the fear before the inertia can build up. So that sort of scared about sharing data and not knowing the consequence, I think that's something that I think HMA has really given a lot of thoughts to try to mitigate this risk. Now, and last but not least, now I'll talk about the sort of invisible developments, on the API front and so on. But lately, in the past year or so, there have been a few pretty visible projects that, in a way, have captured imagination and also garnered more public interest, including the media. So one of them was a project by Hsbc. So Hsbc, again, made an announcement that they are going to collaborate with the largest e-commerce platform in Hong Kong. So that e-commerce platform is the equivalent of the Amazon, the Tmall of the world, and they are the largest in Hong Kong by far. And they also have this initiative called Open Data Bank. So literally, they're opening up the data of their e-commerce transactions, mostly on the SME side, because they do have a lot of small merchants on the platform. So this is a great use case that a lot of, say, laymen can understand. So, okay, with the e-commerce data from the platform, then the bank can use those transaction data to assess the risk of those small SMEs. As a result, then they can basically offer perhaps a more favorable interests, favorable terms, and so on. So I think this is kind of a more visible projects, use cases that we need in the market so that we can, I guess, on one hand, continue to give the fuel to motivate more advice to participate in this kind of project and seeing the commercial successes. Now, so again, in the interest of time, I would like to pause here because I like to also hear from the other expert from sharing the experience.
Thank you for the update, King. And obviously, it's massively exciting to see how this is now progressing in Hong Kong and how this is being adopted by so many different businesses in the region, really. Keith, with so many new exciting propositions being spun up, the emergence of new business models and even new businesses, as we were discussing earlier, I'd love to get your thoughts on what are some of the use cases you're effectively most excited about?
Yeah, absolutely. I think it's helpful when you're thinking about this to think from a first principles perspective as well. If you think about what's happened in the past 12 months, we've accelerated this inevitable trend to a mobile first world, which means we're going to have an app-based ecosystem with embedded finance across applications where users already are. And so you're going to start to see best-in-class use cases emerge in an app. And you're going to need to be able to, as a user, port your data, route your money, prove your identity for each one of those e-wallets or applications to be able to get the best value out of that. And that's where open banking really shines. And so I think fundamentally, and the great stat for this is over COVID, e-commerce as a share of retail in the UK went from 20% to 35%, right? Like that's a massive jump in a change in how people operate. All of that can be enabled in terms of purchasing, proving who you are, controlling your data through open banking connections. And so we're starting to see a lot of consumer platforms think about putting open banking as the onboarding flow for their application. And I think that is really one of the big exciting use cases. The other one I would highlight is, and Dr. Bill Roberts talked about this a little bit, lending and affordability on the SME side. That's another thing that I think COVID fundamentally changed, right? Your health as an SME changed overnight. Credit scores really can lag that data by a long time. Real-time transaction data allows you to track your accounting, track your finances, prove the health of your business in the moment. I think we're going to see that really take off as a use case for SMEs and really smooth the process of proving your health as a business and getting access to funds when you need that because of it.
Thank you, Keith. Bill, from your perspective, again, I'm sure that you and the team, even in the very early days, looked at not just how this could really be a game changer for the industry, but what are some of the specific use cases that that you and the team were most excited about? I'd love to get your thoughts on that, Bill.
One of the use cases that we talked about in the report, which related directly to some of the competition issues we had, was what we refer to as sweeping services. So these would be services which automatically would, for example, if once you've told it what to do, would take money out of your current account where typically you're not getting any interest and deposit it in an interest-paying account, say a savings account, until you actually needed it. So you would set a float level if you want for your current account, and it would take any funds in excess of that out and put it in an interest-bearing account until you needed it. And it would do that without you having to instruct it every single time. That was one of the use cases we talked about. And the converse of that was that if you ran short of cash at the end of the month before your paycheck came in, then it would lend you money automatically to avoid paying an overdraft, and it would guarantee you that it would charge you less than your bank would charge you for an overdraft. So that's quite a strong sales proposition. Other propositions that we saw were to do with, for example, the loyalty, what we call the loyalty penalty, in terms of using your bank transaction data to identify areas where you may be paying too much for your broadband or your energy costs. And as someone's already mentioned, in the SME field, opening up alternative forms of finance for SMEs and customers too. There's a big problem in the UK, particularly with millennials who have a fairly thin credit file, but using open banking, they can bolster their credit rating by demonstrating that they manage their finances well. And exactly the same would go for SMEs. And so sweeping services also would apply particularly to SMEs, many of whom keep cash in their current account so they don't spend it before the tax man comes along and takes it. So they have quite big balances, tend to have quite big cash balances in their current accounts. But it's just starting. I mean, the other point I'll just make here is that, as Dan said, we kicked off in January 2018. And about March, people were saying, well, nothing's happened yet. What's going on here? We're expecting some kind of big bang. We had to say, look, you're getting this wrong. We're not boiling an egg. We're growing a forest. This is going to take time for the ecosystem to take shape. So we're only just now starting to see these great services being adopted big time by consumers.
No, we're not boiling an egg, we're growing a forest. I like that analogy, Bill. Francisca, I wanted to come to you next. Now, we're about, 3-4 years into this journey now, at least here in the UK. How do you think this whole space is going to evolve? Obviously, we're going from open banking to open finance, but I'd love to get your perspectives on how do you think this whole open banking, open finance space is going to evolve in the years to come?
So that's a very, very good question. So there are a few things that we look at. So I would say the evolution of the space is going to be a byproduct of how this underlying infrastructure will mature over time. I think there's going to be a direct correlation, and I couldn't agree more with Bill when he says that this has been really a slow burner for very good reason, because it takes time, because you need to build the underlying capabilities in order to then see the result, and that takes months, take years, and you have to be patient in that sense. So now, where things can improve, and what sorts of outcome they can generate. So there are, I would say, let's think about in 3 dimensions, like 3 different aspects that we really care about at Layer. One is about more feature, as in maybe more data or more capabilities from all the different specific KPIs. So sweeping may be a very good example. Like, can payment initiation somehow replicate the use case of card on file? I think this is incredibly exciting. It's going to be a revolution, not just in finance, but just like in the way you pay, in all categories, period. Then is about how do you improve the reliability of all this infrastructure. And I believe in the early stages, especially in the UK, that has been a challenge. Now we see the very same challenge in Europe, almost like you have to go through certain maturity stages. And I think the next step is, can open banking become really like an incredibly reliable infrastructure in the very same way you would expect from those mission critical digital services that exist out there. So is that acceptable that an interface is down for 5 minutes? I would say no, but I think like we need to get there. We need to get there. And then I look at the customer journey, the authentication journey. Provided that specifically in the UK, I think like the CMA and the OBIE, they really they have done an incredible job in coalescing around app-to-app. We see that sort of innovation now also extending in different countries in Europe, in Spain, in Germany, in Lithuania, but many others are actually following. But the essence is, can we build an experience that from one side, it does provide control to the end consumer, and it does put them at the center of the universe, but on the other side, we are simplifying how they are doing things. So can we use biometrics everywhere? I believe so. We should do more of that. Can we make those user flow frictionless, but at the same time informative enough? That's the challenge that we need to overcome. Now, if we do all of that and a little bit at the same time, then I believe the final product, you will see basically we are at the dawn of the creation of a new digital channel. It's going to be a new digital distribution channel. Like I believe, like if you look maybe 2-3 years from now, but I think like some of the most forward-thinking banks are already thinking in this way. Like they will think about how open banking can be one of my many different channels where I interact with my consumers. Can I distribute products? Can I use that to keep engaged with those customers? Can I bring and deliver value? And so then you will see that this very wide information channel will cater for payments, will cater for financial data, for risk data, for identity data. And there's going to be a combination of more than one together to solve different user flow and use cases. So at TrueLayer, we are extremely focused on this concept of data-enabled payments. So how we can create a rich payment flow that is data-enabled, that is not just moving money from A to B, but it's about bringing in the same user journey a number of other data points that enrich the transaction and allow the merchant in this case to create way more efficient flows. But that's just one of the many examples. Like there are really a number of like very high permutation of all those things together. And you will see also companies eventually specializing in one side of the equation and more than another. But But I think like we are talking about a new channel. That's really important.
Thank you, Francesco. Dan, from your perspective, if we were to future gaze, for a second, how do you think this whole space is going to evolve in the years to come? Do you think it will become a new channel, as Francesco said?
I think it already is a new channel for some of us. I think that at NatWest Group, we've had a long-held belief that API enablement was a huge step into the future. And I think, like a lot of things, it's easy to agree on that and tough to deliver that with a lot of priorities through the crisis, et cetera. And I think working with our regulators, fintech community, and advocates, we've come up with an ecosystem that for us has enabled us to finally put some traction under that and put a channel in place, which isn't a channel we've developed solely for open banking use or for what we call regulated third-party use. We ourselves use this channel. This channel had to be, quote unquote, just as good enough for us, good enough for everyone. So we have something on the order of about 18 or 20 digital propositions that run on these same exact channels that third parties such as TrueLay or Plaid use, and SaltEdge, of course, uses. And we think that does what it says on the tin. That means that we want it to be performant and reliable because we use it ourselves. We started to build out capabilities, open banking payments platform called Pay It. We're actually working with accounting platforms on ensuring that our customers can easily sign up to those platforms, not only share data, but sign up to those platforms, make payments from those platforms, as well as in certain cases, help them during their cash flow management such that they can understand what types of credit might be available to help them through various ups and downs in a business cycle. And that's early doors for us. That's very early doors for us. And I think the industry as well. I think we see open finance, the next big step in the UK and hopefully around the world in moving out to a broader set of financial products, pensions, investments, loans of various kinds. And again, in the UK, driven by smart data and BEIS, our business, energy, industrial strategy department of the government, we're looking even broader, which is effectively what I would call open everything. Again, it gets back to consumer data rights, but it really drives a digital economy. And so we see a huge opportunity. And actually, although some of this, with all due respect to Bill, was targeting increasing competition in banking, I still think well-established financial firms have a huge opportunity because we've held the trust of customers for centuries in terms of guarding their data and their privacy. And that's something we don't talk about much, but it's a huge opportunity for us and others in the industry. And it's also an opportunity to potentially be introducing new products that, again, help that digital economy, things like smart contracts and the like, because as Keith and Francesco and Lisa have talked about in terms of that digital economy, new services, there is a need to ID who you are. There isn't a need to sign contracts that are legally binding and not in person, right? Because mobile use has increased. And I think that there's an amazing opportunity as we move forward to really build that out into something incredible.
Thank you, Dan. Gary, I wanted to come to you next. I wanted to switch gears a little bit and talk about consumer adoption. Now, someone referred to this earlier that some people are somewhat skeptical about consumer adoption. Although when you look at the numbers, I think we're seeing great adoption, not just in the UK, but in various other parts of the world. What's being done? So what are you and the team and what else is being done across Hong Kong to really ensure that consumers are adopting open banking solutions?
Yeah, I think, as a banking industry as a whole in Hong Kong, I mean, we have a very big responsibility to kind of protect the consumer, right? So HKMA and other regulators depend on the banks to really, look out for the consumer interests. So I think the key thing to increase customer adoption is I would say a couple of areas, right? So one thing we're trying to do is really, I mentioned it a little earlier as well, which is educate industry, other industries as well, or other players entering into the Hong Kong market, exactly what the regulator expects, or the banks also expect in terms of how we can protect the privacy or security of the customer's information. In the Hong Kong open banking model, banks are the responsible party to govern and monitor the open banking use cases. So it's really up to the bank to, first of all, protect the consumer, right? So we really don't want to see, everyone's hard effort in terms of building that adoption. And then if there's, one case where, there's leakage of information or someone misuses the data or the trust that the consumer is given, then it kind of sets everyone back, right? So I think one key area is around, making sure our partners or other fintech players also aware of, the rules that we're governed by. Second, I think is, teaching the consumers, what the benefit is, right? And how they can kind of control what they share or not just look at the marketing campaign or, that they get a free gift or something like that and then share all the data out. They need to really see what value that brings to them, what the partner is actually using the data for. I think as the understanding of how the open banking use cases grow, then naturally adoption will come, right? I don't think, I think King mentioned, or other panelists also mentioned this, it should be transparent to the user, right? Open banking shouldn't be a thing that they need to kind of think about. It's just more a way to kind of make banking or financial payments, etc., or different use cases be seamless into kind of the daily lives, right? So once they know what they're sharing, how to control it, I think the adoption will genuinely come from the consumers.
Yeah, I think you're spot on, Gary. And of course, making sure that it is effectively that invisible, that seamless experience is absolutely key, and making sure that people understand that it is safe and secure, you name it. Although I do like free gifts, Gary. So if you do start doing that, then please do let me know. Lisa, from your perspective, what do you think with open banking now being adopted by so many other jurisdictions in various parts of the world? What do you think some of those countries can learn from the rollout of open banking here in the UK?
Yeah, I think the first and the most important thing is that it's critical to have a standard. Without it, it's a really no-go. And the most important, to have a really good, well-described technical specifications. And I think that CMI9 and OBA did a really good job. That's probably one of the reasons why, compared to the European Union, in the UK, we have a much higher adoption and a much better user experience for the TPPs and end users themselves. The second one is the user guidelines that were provided, for example, in the UK by the OBAE. It kind of allowed every party, banks, fintechs, to really understand how it should look like, what should be the perfect user journeys. This avoided a lot of errors that we are currently seeing and reporting in almost all the banks in Europe. That's, I think, quite important. The third one is licensing of the TPPs. So, for example, the FCA did an amazing job compared to some of the other regulators, helping out TPPs along the way with the licensing, explaining what are the missing pieces that the TPP should implement in order to get the license. In other jurisdictions, for some of our clients, it took sometimes 2 years with enormous processes to just get the license. So this is something I think critical, and especially for those jurisdictions that are considering bilateral agreements and considering the option where the TPP should agree with each single bank, to understand that this is a no-go, just because then it's not going to be a real level playing field, but it's going to be someone really having all the agreements and all the money to run across and to build the applications, and then for smaller fintechs it will be impossible. The other thing is, I'd say, the regional standards in a way, or possibility to extend across regions, so that, for example, if you're building a standard just in a single country, it might be not as useful as if you'd consolidate this across several countries in a region. Then it's going to be much more useful for any business to use it. And I would say that this is something very useful. For example, that's why in the UK, Europe, it makes a really good sense to have it all across. So these are just, I would say, some of the takeaways. In terms of the bad things that probably should be also taken care of is, of course, we're talking about 98 consent and the authentication journeys. That's one of the reasons why the user adoption in some cases is declining. The other thing is, for example, why payments are not really on uptake compared to how it could be, is that the availability of the APIs are not at the level yet. So in some countries, we still have 30% acceptance rate for payments, which is impossible. And we are talking about the APIs that are live for nearly 2 years now, and we are reporting all this error to the bank. So this is something that is definitely has to be changed. And second issue is no possibility to make refunds. So this is something that, for example, some players have to handle through e-wallets and some other options, just because from the regulatory standpoint, there is nothing like it. So these are, I'd say, just are some of the things that we are looking at. And of course, when we're moving, like I really love the Australia example where they went a bit out of the open banking box and also included telcos and utility providers under the CER rule. I really hope that this is something that will be adopted by other regions and markets, and hopefully it will soon come to Europe and the UK as well, so that the consumer can benefit not only from the open banking, but really from the open data on a scale. So that's something that I definitely look forward to see in open banking trends around the world.
Excellent, thank you, Lisa. I very much agree with you that the need to have a single standard or a common standard is absolutely vital to successful adoption. And as you say, if open banking APIs are not available effectively 100% of the time, then from a consumer perspective, if you're trying to make a payment once leveraging open banking rails and it fails, you may try to do it a second time, you may try to do it a third time, but otherwise you just start to lose trust, right? So making sure that these things actually work, of course, is also vital to adoption. Keith, from your perspective, I know you and the team at Plaid are expanding rapidly across various parts of the world. If you're in discussions with, let's say, a regulator in a country that wants to roll out open banking as well, what are some of the lessons learned that you would share based on what you've seen in places like the US and the UK?
Yeah, I think I would start out with, and I think Lisa touched on this well, the consumer data right to start. So define the guiding principle here. And I think we are getting to this world. It's almost like the global sweep of privacy that happened following GDPR, where I think the understanding that individuals create a bunch of data, they should have a right to access, control, and port that data wherever they want. Starting with principles is the key thing here. And this is what the US did as well with Section 1033 of Dodd-Frank after the financial crash, which basically said you as a consumer have a right to access your data. But then I think the next step there is to create, as you said, a single set of standards. The thing I would warn here is I think it's more helpful to let the market help develop the UX standards than to get that deep as a regulator and set what the standards are. I think you need to set the principles, provide the guardrails, and then let the market do the work to figure out what's the best user experience here. I think that's something where we've seen some tension, and you've seen some institutions in parts of Europe dragging their feet and creating really painful user experiences. And then the fourth thing is you need to create teeth for this, right? So you need to create enforcement mechanisms, abilities for people to raise tickets, raise issues, and that needs to be sustainable and steady. So there needs to be an industry body with all the different players in the ecosystem where they can come to the table and hash out issues. So that's the way I would think about approaching it if I was starting from scratch and building open banking in a new market.
I could not agree more, Keith. I mean, Francesco, from your perspective, again, you guys are growing rapidly. If you were a fintech business in Hong Kong, and you're looking at open banking and you think, wow, this sounds really exciting. What advice would you give to a fintech company in Hong Kong that has yet to embark on this journey?
Let me think. So there are a few things that I believe it's quite challenging, especially when you are at the early days of something that is developing. And I believe like I would say timing for startups in general, but I think like for any business is of essence. And so how do you time really against something that is happening out of your control and you need to align with, but also there's a bunch of unknown regarding what you're gonna get out of it. That's something we have seen in the UK really well. Like I think open banking as a regulatory narrative really started in 2016, 15 maybe. But then we had to wait 2018 to really see the very early stages of that. And then I think Dan mentioned that like it took like a little bit of time before actually the banks were ready for prime time. So then basically from the first time you heard about regulator moving for open banking into really getting into fruition of the value, probably we had to wait solid 4 years. So now 4 years is, in startup time, in business time, is a tremendous amount of time where you can like build billion-dollar companies now in 4 years, actually maybe multi-billion-dollar companies in 4 years. So then like that's probably like the main challenge of all. Like, how do you de-risk this sort of time to market? I would say, to me, that's the biggest one. Then there's all sorts of other, like figuring out really where is that you're adding value, and try to test your hypothesis incrementally. But I would say from a purely open banking perspective, I think time to market, getting the comfort of when the infrastructure is ready for prime time, it's actually the biggest challenge. Now, this is also a call to the regulators, to the I would say the different constituency of the ecosystem, to really flag the level of readiness of the infrastructure, and also like care about that since the very early stages. I think this source of predictability of the outcome, it's really key. This is a problem that you will see all around the world. Like now Brazil is going through a phased rollout. Same problem, like phase 2, phase 3, what does it mean? Like what we are gonna find the moment that we do connect with a bank? Who knows, really? But that's the whole game, right? So that's, I would say that's maybe like the biggest takeaway from now more than 5 years in open banking land.
Excellent. Thank you, Francesco. On that note, let's go and build some billion-dollar businesses, right? Guys, I'm conscious of time. I'm sure we could have continued this conversation, you know, for a few more hours. Hopefully, next time we get to do this in person, because I desperately miss in-person events. But at least here in the UK, we're getting there. So drinks are on me when we get together next time, guys. Thank you so much for sharing your perspectives, and thank you to all the attendees as well for joining us today. I hope you enjoyed the discussion, and again, a massive thank you to all of our panelists for their insights and their perspectives. Enjoy the rest of your day, and I hope to see you all very soon. Take care, everyone. All the best.
Thanks, Jeff. Take care, everyone.
Thank you.
Thank you. Bye.
Thank you. Bye-bye.
Thank you. Bye.